morning, friends. Welcome back. Welcome to the 15th episode of State of the Market Live. We'll analyze Nifty futures and Bank Nifty futures, as well as top index stocks in this episode, as we do every day. Before we step into the analysis, I want to discuss briefly about market understanding. If you have seen Nifty futures and Bank Nifty futures yesterday, on a broader scheme of things, that is, if you zoom out the chart, you'll see that there is no difference between any of the moves that we are seeing. So probably this will stand out and some other days will stand out. However, yesterday was a very different day. For example, if you zoom in now, if you go into the micro understanding of the market, we opened at around 432. We went up by some 200 odd points. Then we came back by 200 points, around 400 points. And then again, we went back to the highs. Now, this kind of market would generally jolt many of the traders, especially people with a poor understanding. But what was surprising yesterday was most of the large traders, that means traders with huge capital, if they are to be believed, they were also jolted with the kind of moves that the market showed in both Nifty and Bank Nifty. So I wanted to highlight this point because there are two things that most of the traders, especially retail traders, do not understand. Number one, you need a proper market understanding. Number one. Number two, whatever capital you have, whatever size you have, it doesn't matter. You need to size your positions properly. Because you are hungry, you cannot eat 10 kgs of food in a day, right? So there is a limit to everything. Similarly, in trading, there is a limit until where you can trade. You cannot just put thousands of lots just because you have capital. You need to see what the market can take from you. That is also very important, because if you are putting in such a huge size beyond your capital, you will end up losing no matter what, no matter how sharp your strategy is. It doesn't matter. And also, you need to look at the market situation as well. For example, you have a lot of capital, but the market does not have the liquidity. What will happen? You end up facing the wrath of the market. For example, you have a lot of money, but there is no water available in a desert. What can you do? You are left to fate. Similarly, in the market, you have a lot of liquidity, you have a lot of money, but the market's context or the market's ecosystem for that day might not be right for the kind of size you are putting. So basically, if you are playing with, let's say, 10 lakh, there is a limit until which you can trade. You can't over leverage your position. So number one, you need better market understanding. Number two, you need to be controlled in terms of leverage. That leverage comes from your capital. If you do not understand these two concepts, the market will rip off the trader. Now, yesterday, if you see, even Reliance made wild moves. It first went up, came back, and then somewhere ended in the bottom quartile of the day. Now, these 2 points are very important on the behavioral side for traders. Remember, you need better market understanding. Number two, you need to have control on your position size. It doesn't matter how much you have, but your position size is determined by the market condition as well as your capital. Remember these things. Another reason why I highlighted these 2 points is yesterday, surprisingly, most of the traders were frustrated by the market move. They did not know what the market was doing. They were caught off like a deer in front of headlights on a highway. But if you watched my Telegram channel or if you watched my yesterday's State of Market Live, I had utmost clarity of the where the market can go and where the market can come. If you see, the market strictly moved in zone 1 that I mentioned. You can watch yesterday's video. I'll also put the link in today's feedback section. Please do watch it again to understand why the market was wild for many, but for people like me who are well planned in their trading day, it is not. It was like any other day. The market has been very volatile since last expiry. People are complaining, most of the people on social media are complaining that the market is not clear to them. But to me, it is damn clear. Every other day, if you go and watch our State of the Market live, you will see what my plan is and how the market followed my plan. Okay, you should become so good in your trading plan that the market follows your plan rather than you following the market wherever it is going. Now, without much ado, let's get into the analysis of Nifty and Bank Nifty futures, and then we will look at some key stocks. One more thing, guys, if you have any requests of stocks that I have to discuss the next day, please drop in a message to me on Telegram channel, and I'll try to discuss those futures stocks here in SOTM Live. Now, let's look at Nifty. So yesterday, the market moved within a broad range. So no change for me. For me, the market has moved in a broad range like this. Nothing has happened. There is no change in whatever the market has done. So on a broader context, we are moving between 15,200 and 15,950. Now, if you get into the next small range, you need to see the market is playing this range. So today, my first zone of reference is going to be this one. My first zone of reference is going to be this one, zone 1. So I will be focusing on any trend trades only if the market breaks out 15,714 or 15,356. Until then, I will keep quiet. If the market opens in the middle and is trying to go up by, like, say, 200 points from here or here, then I will look for some short intraday trades. But a large trend day will happen only when we are moving out of this range. The next range that I will be looking for is these two levels, which is 15,948, and then at the bottom I'll be looking for 15,200 levels. Intermittently, we have some levels we have to consider, which are here. We have 15,830 is the level that comes from MarketProfile, and also we have to cross 791, which is a very key level that we have to break. So today I'm not expecting this particular zone to be broken. We may mostly end as a trend day or a negative day. Probably we may fall until 350 or 300 zones. So at the bottom we have something like 15,317, and below which I have 15,260. These levels come from MarketProfile, and this is how I am going to mark my day. So mostly it is going to be zone 1, and then I will look for zone 2 as this region. Why I am marking this as zone 2? Because we had an uptrend week. If you see, the market is in an uptrend. If you see, the market is in an uptrend here. So on a Friday, typically we may go through a down day. This is what I am expecting mostly, but I will be ready if the market tries to do something like this, and I will still be ready. I am not going to be biased. At pre-open, if it is indicating a higher open, and if it is trying to break 714, basically if it is trying to break 714, then I am going to look for longs on this side. But mostly 95% of the time, if we have a trend day for the week, for the expiry week, not regular week, expiry week, this is last Friday, and from Friday we have ended higher. So mostly we will end lower, probably closing near 260 or below that. But if it breaks 206, it's going to be very difficult for the market to survive. So on the upside, this is going to be my zone 2. This is going to be my zone 3. We have marked zone 1 and zone 2. Now this is zone 3. That's it. So in Nifty, what are the levels I'm going to look for? At open, I want to at least the market to break the intraday range first. That means yesterday's range, because yesterday's range was pretty huge. It was like 350 to 650, around 300 points. I want the market to break this particular zone first, and if it comes down, then I'll look for any shorting opportunities. I still feel the market has to go down because of Reliance, which we'll discuss during Reliance. Now let's move on to Bank Nifty. In Bank Nifty, the situation is same. Let's shift to a higher time frame so that the view is better. Again, the same thing you are looking. Always take a step back and see what the market is doing. Now you see that the market is trading in a broad range. Always remember, the best principle of charting is every day you remark your levels. That way you're going to stay under control. That way you're improving your muscle memory to follow the market's moves. So the first zone that I'll be looking for is probably this last week's expiry zone. That means this is the expiry week. So I will look for a broad zone 1 in this area. But below that, what I will look for is breaking of day zone. That means either a gap up or gap down, or it has to, if it opens in the middle, then we have to look for break of day high or day low. That is very important. That is the primary rule. The market is not changing the previous day's range. There is no point looking for any kind of breakout or breakdown. For example, see here, this was Friday. So on Monday we did not, you see that we did not break the day's range. But once we broke the day's range, you see that how the trend day started. So like that, we have to remain in day's range and then see whether the market is breaking on the upside or downside. If it breaks, the zone 1 I'm going to look for is 3361. So this is going to be my zone 1. My zone 2 is going to be somewhere in this range. So basically, I will look for any move above these levels is going to remain as zone 2. So this is going to be my zone 3. I'll come back to zone 2 on the downside. This is going to be my zone 3. Why? Because I'm expecting a down move rather than an up move. So on the downside, I will be looking mostly for this kind of zone to look for. We'll see how to get downside levels. So this is going to be my zone 2. So what are the levels I should look for in zone 2? In zone 2, again, we'll redraw the levels. So we'll just look for a swing high, low, and then see what are the levels that we should look for. So basically, we are trading in this broad range in zone 1. We are trading in this very minute range in this zone 1. So once this zone 1, that is once today's low is broken, we are going to look for downside. And if there is any decent fall on the downside, the first level I will look for is 32058. And the next level I'll be looking for is 31090. It may not happen in a day, but we should be ready with the levels that will happen on the downside. What will happen on the upside? If Bank Nifty determines to go up, what will it do? So basically, we'll move in this kind of congestion zone, which is called OFIB zone. And then once we break the day's highs, we'll look for a break of 33,946, and which will lead to 34,738. If at all such a large trend comes, otherwise we should stick with the opportunities within this range. So I'll be looking for breaking of zone 2 first. If at all it breaks zone 1, then I will look for zone 2, which comes around 32,326 and 32,058. But that is a low probable zone. I'm expecting it down move, so probably we may end somewhere above 32,326. In case it falls, we have to be ready on both upside and downside. So that is what is happening with Nifty and Bank Nifty. Let's look at what is happening in S&P 500 futures. I told you that 3822 is a very key level that we have to look for. So where the market can be positive. So if S&P 500 goes above 3822 and sustains this before our pre-open, I'm going to look for longs that indicate strength. And also in SGX, we have to break 710 for any longs. Otherwise, we will look for a rangy move to down, rangy to sideways move. So we'll wait for pre-open and then see where the market is leading us. Let's look at Reliance. So in Reliance, we had a very nice down day. I told you that we are near 200-day moving average, EMA, and the target on the downside is 2420. So mostly if there is any down day, we may hit 2420 probably today. However, because of yesterday's move, I'm going to look for any break of downside before it gets 2420, or it has to break the day's high for the for us to look for any longs. I still don't see strength. However, we need to break 2420 for any deeper shots, and also this is a good demand zone. So probably there can be a U-turn also if the markets go up from here. So I'll be looking for any trades outside this range, outside today's range, rather than within today's range. So in HDFC Bank, both HDFC and HDFC Bank have been showing a lot of strength. And today, if the market is negative, they have to come down. You see that yesterday, the market ended positive, but HDFC and HDFC Bank were totally within the range. So I'll look for a break of 1319 and 1354 for any down move. So in a down move, what are the levels that we should look for on the downside in HDFC Bank? So basically, I'll be looking for something like a break of 1318 can lead to 1287. So basically, this is the level where it can go if there is a negative day. So basically, we might probably move in like this and then go like this. But we need to break this zone. This is the most important to break. Okay. So that is for HDFC Bank. Let's see what is happening in HDFC. Same situation as I told you in HDFC2. I'm going to look for a range break of this particular range. So probably this is a very big range. So like it's almost like 60 points. Still, you want to take trades when there is an opportunity, not when you want. So probably I want this trend line to be broken. So any move above the day high, I will be looking for shorting or buying opportunities depending on the market condition. HDFC may be rejected here or here. So basically the move can be somewhere like this. It can come down, it can go like this if the market is positive. Otherwise, it will come down, continue the move, and probably it will break this level. So what are the levels we have to consider before taking a short? So if at all I have to take short, I'll wait for the bottom and I will wait for it to break this particular zone. That is the reason I said we should break 2139. If we break 2139, then we are going to hit for 2107 levels, and that can be a decent target at the bottom. Wait for the price action here before responding to every move. Let's see what is Kotak doing. This has been one of the key movers. So basically, we'll look for Kotak on a daily time frame. You see here in Kotak, what is happening is we have been kind of making a very nice range so far. So I expected a lot of weakness the other day. Basically on this day, I expected a lot of weakness. That is not happening. So any shorts in Kotak will now be active only below these levels, and longs can be active only above these levels. So within this range, do not look for any scalping trades. because it is a crazy stock and you see the kind of moves it makes. So any break of 1649 is only going to invite me into a trade in this. Otherwise, I'll stay away from Kotak for today at least. That's all for today, guys. Hope you have enjoyed this episode of State of the Market Live. I'll be back on Monday again, and let's meet in Telegram channel for live commentary. Please like, share, and subscribe my channel. Please encourage with feedback. Have a great day. Be safe. Trade safe. Bye-bye.